Hello everyone, I'm Dr. Stock, and today is a little bit different. I am outside on my daughter's trampoline that they got for Easter. Why the heck am I out here? That's a great question. Well, I'll tell you the exact reason why. Because the stock market, like most things in our lives, need boundaries. And well, bouncing out here, I mean, you guys can see the sunshine, the nice, let me stop jumping for a moment here to help you out. You know, stock market needs boundaries, and I'll tell you what, watching them growth stocks, whew, a lot of red today. And you know, it's not everything. It's really not. I got my dividend portfolio. If you check that thing out, thing's been rock solid. I started it for the Patreon group on February the 1st, and it's gone up from there. The dividends coming out from the companies from there. Got to toss in a few of those updated dividend payments that have come out in the past couple weeks. But I'll tell you what, the pain's just not there. The pain comes in from watching those growth stocks that I put out there and that I plan to have in place time for bouncing. Again, I can't help myself. The pain comes in from, you know, just magnifying glass, putting those every single volatile moment and red day for every one of those growth stocks under the microscope. And man, that's painful. It just wrecks your morning, wrecks your day. And I'll tell you what, if it wasn't for the Patreon and if it wasn't for YouTube, I want to bring this information to you guys. I guarantee you, I wouldn't watch it every day. I would see what the futures were calling for, and you know, as long as there's no specific news affecting my stocks, I would just let it go. It's nice to watch in the green days, you know, it's refreshing, it's invigorating, it's exciting, and you know, it's just the opposite feelings. You know, it's painful and it's bad on the days when it's red. And you know, look somewhere else. As a matter of fact, one of the things that I like to do best, watching the stocks that I plan for growth for 1 year, 3 year, 5 years out, you know, that's the plan. And unless there's company specific news that changes that plan, that's the exact way that it's going to go. You know, I will ride it out. You know, some of them, if I cut early, it's either company specific news, you know, take the tax loss on it. You know, there's a couple of them that I'm evaluating that I think, you know, might just get the axe. So, man, the sun is bright. You know, but those are things. So what I like to do on those days, you know, when there is a lot of red, is that I like to look around for opportunities, not just buying the dip. And I know that gets overstated. And for people who have been buying the dip, I know that people in the Discord have been saying, you know, one in particular I can think of said, you know, I'm so sick of hearing buy the dip. You know, what else can we do besides buy the dip? And so that's what I put my mind to. And that's sort of what this video is about. So I hope that you appreciate the different flavor that we have here. And, you know, just talking about some other things. And you know, one of the things that I really encourage you to do, even if it's stopping right in the middle of this video, honestly, you know, if I get the ad money from the ads that are on here, fine. What I would much rather than a couple of pennies from you guys watching an ad is find a way to give yourself some peace of mind, especially if you're heavy into the growth stocks and watching this happen. Compartmentalize it, get away from it, distance yourself from it, because it's the only way that you're gonna get a clear head. All right, so I'm gonna hop inside to record for right now. Let's just get ready to rock. All right, so back into the recording area. I apologize if the bouncing was too much or if it was too bright. I know trying to record where there's actually light on my face rather than shadow, you know, having the sun up in my face like it was at that angle, it was pretty rough on me. Anyway, before I get into more of the talk on protecting our downside on these sort of days that we have like this, or this sort of time period that we have like this, all the way from mid-February until now, I mean, you know, what happened, what can we do about it in the future? You know, we want to know what sort of plays that we can do that deal with risk management, and that's sort of the essence of this video. So before I get too deeply into that, as I was saying, in the outside bouncing around on the trampoline part, I said take the tax loss, and I do want to, I combined two separate things, and I want to apologize. I was looking through it quick, just making sure I said what I wanted to say. What I meant was take the loss, take the tax write-off at the end of the year if I sell any of my stocks that happen to be down during this time. So I just want to make that clarification, not take the tax loss, but take the loss on the equity, on the shares, and then write it off during tax season, where I'll get a little bit of that loss coming back to me. So let me move on from there. So first and foremost, when it comes to protecting the downside, I gotta say, probably the best thing that you can do is just educate. I mean, you want to educate yourself on, what exactly takes place when you are investing in the stock market. What are the implications? What are the risks that you have? Because we definitely like to think about the idea. We all jump into it with, like, man, I could make so much money here. And the answer to that is yes, you could make so much money here. And there's just, there's enough people who make so much money that we all know somebody who just, crushed it during this one big play. And that's, it's sort of like a lottery story, sort of like gambling that way. And we just, if we're going to be long-term investors, and if we're going to stay with cash, that we're not going to blow up our accounts, then we got to be careful about how we get into these things. Yes, it's a place where we can make a lot of money, but it's also a place where we can lose a lot of money, and we want to be careful that we make that money, basically slow money over long time periods, and let compounding in time do its thing. That's going to be our best bet. That, when we do our individual investing versus going against the indices, for example, what we're betting is that we can beat that 9% in the indices. So when we first get into investing, educating ourselves on what we stand to gain from finance and investing. The money, of course, what do we stand to lose? The answer to that is still money. So trying to find those safe plays, talking to a financial advisor, really getting yourself started on the right path is a great place to go. But my guess is if you're watching this video, you've already gotten started, you just sort of want to know what to do about it. So during this red time, especially if you're somebody who really likes the high momentum, high multiple plays, the growth stocks, the penny stocks, really, now would be the time while all that stuff is selling off and we're experiencing all that volatility, especially if you're low on funds or if you're high on margin and you can't really do a whole lot to exit your positions for one reason or another. Maybe you're bag holding and you're hoping that it will come back. Education is going to be something that will just, pay itself back time and time again. It would pay itself in multiples to educate, because it helps you to preserve your capital that you're investing with. And if you don't have the money to invest, it's definitely hard to invest to make more of it. So we want to really emphasize on the preservation of capital. So the next thing that you want to do, besides the education, mind you, education doesn't stop. You always have to keep on learning. I never stop learning about these things, and I want to share just some of the basics that I've learned with you. So that trading plan coming up, why are you investing in this stock? How long do you plan to hold this stock? Is it something that's going to be intraday? Is it something that's going to be a few days, a few weeks, a few months? Those are things that you have to determine for yourself. Is it going to be years long that you hold on to these stocks? So getting that answer for yourself, is a really important thing. Why are you even interested in the company in the first place? So those are questions that you want to ask. And really what we're looking for is continued growth in the company. We want to see continued increased valuation for that company. So one thing that we're looking for once you've decided to invest in the company is, what's your entry point? Because just because you're like, okay, I'm going to buy this company, it doesn't mean that the timing's right for it. So for example, Coinbase, I like Coinbase. I don't know that the timing is right for it for me right now. As a matter of fact, let me take just a quick peek at their price today, and I'll let you know if that timing's right. All right, so Coinbase, I took a look at it, and its low price today, at least during the regular trading hours, was about $312, and for me, I would like to see that under $300. So for me, the timing's just wrong. I like the company. I think that they're going to have some serious growth through crypto adoption, and I really think that the economic moat that they have surrounding them, especially with the name that they've made for themselves and the safety that they can provide and the liquidity that they're working on, and they also have some revenue issues. But if they can get all of that worked out, I think that we're going to see really strong positive results coming out of Coinbase going forward. This is not a Coinbase video. Let me continue. So an entry point for me is below $300, and I will start to take a position. So the next thing is, how much do you invest? For me, it's going to be very little. Why? Because I'm still pretty uncertain about this company. They are brand new as far as public trading goes. Yes, they have a fairly long history to them. As a matter of fact, I had an account as far back as 2013, I believe, with Coinbase. I'm going to have to go back and check my records and some of the crypto that I had in there. But it's a company that has stood the test of time so far, and they're also producing growth numbers, and they also project growth numbers going forward. So the next thing is, okay, I have my entry. How long of a time frame do I have? For this one, it would be years for me. But if it was something that I wanted to play as an intraday thing, especially with something that would be intraday, or maybe just a swing trade, that would take place over beyond one day's time period, for that, I would most definitely want a sell target, and I would most definitely, whether it's a sell stop or it's a sell limit, something below that I'm like, okay, I'm not losing any more money here, or we call that a stop loss, or at what point do I take the profits from that? So for this, if I was treating it as a swing trade or a short-term investment, those would be things that I would really, really want to know. What price target am I looking for here in order for me to sell this thing? And where should my stop loss be set? What is the risk to reward ratio that we're looking at? Those are all things that you want to consider. I want to move on to, from that to specifically talking about just stop losses. So setting a stop loss is a harder thing to do than you would think, and it's not that it's technologically difficult to do. It's actually fairly simple to do, and you can look it up on any of your trading platforms, and there'll be lots of information on how to set up that stop loss, so that way you can minimize any downside risk that you would have. And the more you educate yourself, the more you'll find out. Even with a stop loss, it can still slip past you depending on the time of day, and it can miss, so there's still risks that are involved, but it is further protection. People don't like to set a stop loss because they're like, oh man, but I'm going to lose money on that. Yes and no, depending on what sort that you set for yourself, but again, it all comes back to education, depending on how much you're willing to lose. By entering it, you assumed the risk just by investing. So setting that stop loss would allow you to mitigate your risk, or help to minimize your risk, at least to an acceptable level, something that you wouldn't like to do, but you can still sleep at night. So those stops, they can be hard stops at a certain dollar amount, or they can be trailing stops at a certain percentage or tick or something. Those are all different things that you can do with that to help minimize the risk that you have. Diversification is also a huge way to do that. That you're in different industries, that you're investing in big companies like large cap, small cap, mid cap. That you have all those different ones things that will help you move forward. Investing in solid companies. If diversity is something that you're looking for an easy time of, there's ETFs out there that track the indices. As a matter of fact, buying into an ETF like the SPY or the Qs, things that will allow you to just experience that growth right along with the indices, is a very strong trading strategy, and it's typically a very safe trading strategy as well. So those are things that you want to consider. There's one final thing that I would like you to consider. And again, this is just some ideas to toss out there for you. This is not an exhaustive video by any means. These are just things to kind of get your mind going, that there are things out there to minimize the risk that you assume by investing in these securities. All right, so I'm sharing my screen here, and I just stole this from Investopedia. You can go ahead and look it up, and it's called Sell Puts Benefit Any Market. That's just where I got this one from. And so I just wanted to show you the basics of options. And options, there are just so many different, there's basic ways to trade options, and then there's also more advanced methods that you can have, and I'll leave that up to your education for right now. But these are some things that I would like you to consider, and I'll share just a little bit of insight that we would have, because you can come up with even your own ways to sort of see how they would be to your advantage when it comes to investing. So you have two different forms of options, and I'll talk about why they're called options in a second, but you have calls and you have puts. And basically with the option that it's talking about is the option to take on shares within that company, or the option to exercise the contract that you join. So to the seller of a contract, what happens is they write the contract, and the contract that you would engage in by buying is listed here. So the thing that I want you to pay attention to is that buyers of the options have a right to buy a security, so the different stocks or whatever it is that you have, whereas the sellers have the obligation to deliver. So what that means is the person who sold you the call, they have to sell you the shares. That's their obligation, because as they're part of the contract, that binding agreement that you have, and this is all done through your broker. You don't even really have to do much after it's done. So they have to sell you the shares, and we can make that work to our advantage. So Norwegian Cruise Lines, for example, let's say that I bought a $30 call for them. I have the right to buy that call option, which would entitle me to 100 shares from the seller of Norwegian Cruise Lines at $30 per share. And what I would do, this is again just a very plain example, and I'm not going to get into the details of options trading here, but at that $30, and anything above that $30, that seller, if you choose, they have to sell you those 100 shares at 30 bucks. The advantage there, let's say the share price goes to 40. They still have to sell you $30 per share for 100 shares. Let's say the share price went to, let's go crazy here, and let's say that I believe highest it's ever been, nothing that I ever expect. Let's say it went up to 100 bucks. That's $70 per share over what you agreed to. That seller still has to sell you every one of those shares for $30. So you're making it's almost this way. There's a premium involved, but you're making almost $70 per share on every one of those. So it's not that straightforward because there's a premium. So by buying a call, you have to pay a premium to the seller. In other words, they're saying, hey, I wrote this thing. I will give you these 100 shares at or above this price that we talk about, so 30 bucks. And in exchange, you'll give me, we'll just make up a number here. We'll say you're going to pay me 300 bucks in order to be part of this contract. So you spend the 300 bucks, you watch the price of Norwegian Cruise Lines go up to $40, and well, then you spent that 300. You can buy those shares at $30 a piece, so that's $3,000, and you're getting $4,000 worth of stock for it. And well, it'd be nice if it was that simple. I mean, really, that assumes that you're right. So just be careful with these, because every options contract that you have means 100 shares. So every premium that you pay is times 100. So if it says that there's a $3 premium, for example, for this Norwegian Cruise Line option that you're buying, that's $3 times $100 is $300 that you're paying for it. And I will make another video where I actually get into specifics of what's taking place. It's a longer presentation that I'm making. So right now, again, this is just to give you ideas. So if you're like, that is interesting, maybe I should look more into that, I really think it's worth a while. I really think that's worthwhile to do so. Getting back to the point of this video, I really have to wrap things up. So let's say that you're a bag holder and you have 100 shares, or maybe it's multiple hundreds of shares at your disposal, and you're just waiting for them to come back in price because you're left as an investor until that company comes back to strength. Well, what you can do is you can actually sell these call options, and what that could do, it could potentially make it so that you have to sell your shares off to the person at whatever price you agree on. Now you have a lot of control over what you agree on. So for those Norwegian Cruise Line shares that I was talking about, let's say that you write the option. They pay you directly $300 in order to take you up on your offer. Well, right now, I think today it was trading at like $26 per share, so that has to go up $4 before you have to sell. It actually has to go up a little bit more than that for it to make sense for the buyer to get them. But that premium that you collect, you can set it up so that you can collect that premium to sort of help supplement that money along the way, depending on how you look at it. So it's a small way to think about it. It's not going to make you huge cash depending on what sort of option you take with that, but again, it's just an idea for you. One other thing that you can do, and that's with puts, and with the puts, check out the right and obligation. So here, if you buy a put option, you have the right to sell a security at a predetermined price. So let's say that that you say for Norwegian Cruise Line that $23 is that price. So what that does, if you're the one buying a put option, is that allows you, should that price hit that $23, you can sell that security. You have the right to do that, and you'll notice the person who sold that put option to you, they have to buy it. You're like, hey man, this thing dropped, you take it, and they have to, just by being part of that contract. So here, if you expect a security to drop, or I should say that if you expect that stock that you have to experience more of that volatility, and you're like, man, I don't want to watch this thing go another 20 or 30%, this is something that you could look at. You could consider buying put options that in the event that the stock should drop in price, that it would limit your downside to whatever stock price it is that you bought that put option at, whatever that predetermined price was. So let's say it was $23 for Norwegian, and well, if it hits that or drops below it, you have the right to sell it there, and the person who sold the put to you has to buy the shares from you. Let them hold the bag. It's just another way to view it, and that's called a protective put, and sometimes they'll call it a married put. And again, what this would assume that you had the 100 shares to sell them in the first place. Let's say that we had a stock like CCIV and we were really afraid because of the most recent SPAC attack that this thing was going to drop back down to $10 per share, which would be insane, by the way. I don't expect it to happen. I think it broke 19 today. I think it was down to the 18s. But what you could do, if you were interested in doing it and protecting your downside, is that you could buy a put. Now you're buying it. It costs you money to do it, so that's a further investment, but it can limit your downside. So let's say that you bought a put at $16, and this thing drops down to $10. You have the right to sell that to the person who sold the put to you. They have the obligation to buy it at that $16 price, which that's enacted by you as the buyer. So this is just another way to consider that. Now, there is tons of risk that's involved when it comes to options. Whether you're buying or selling calls or puts, it doesn't matter. There's always some sort of risk. There's no perfect strategy. If there was, everybody would use it and everybody would make money, and that would be just time. That doesn't even make any sense. So this is just more to consider when it comes to learning how to minimize your risk, or what you could do to make money in the meantime while you're looking through at maybe if you have a bunch of growth stocks, what do you do about it in the meantime? I highly recommend that you educate yourself on options, and this is one that I, at the behest of at least one of my Discord Patreon members, they're like, hey, why don't you make a video about this? Well, that requires I got to put the time in to make the presentation, which is something that I'm going to be working on, about some of the option strategies that we have, starting basic, and then we can certainly fill out from there. There's lots of really cool ideas people came up with for making money off of options, and this sort of volatility that we're experiencing, there's even ways that you can use options to address the volatility and still come out, if not ahead, you can use it to minimize the amount of risk that you take on. So let me summarize. Sometimes when the emotions get too high, especially when it comes to investing, compartmentalize. Step away, decompress, find something to do, anything else, because panic in that moment a lot of times causes panic selling, and it's rarely the best thing to do is to panic sell. So those are things that we want to have plans, we want to have strategies, we want to educate ourselves, and the reason that we want to do all that, let's say that I was the most amazing stock master ever and I made all the right calls all the time, and you're the one relying on me. By relying on somebody else, there's always latency. There's always lag that takes place, and that can throw off the timing, and you're also outsourcing that responsibility to somebody else. And those are things that, and especially when it comes to the momentum plays or the high growth stocks or lots of volatility, you don't want to wait. You want to be ready ahead of time. And like I said, anytime that you're waiting for someone to get back to you, if it's the fast moving stocks, it's time that you don't have. We want to be ready before we enter the trade. We want to know how we're entering. We want to know for how long we're entering. We want to know why we're entering. We want to know where we cut off our losses. We want to know where we cut off our gains. Those are all things that you want to consider. The best thing that you can do is educate, and in the times when that frustration's too much, you just got to do something else. So that's what I have for you today. I hope that you guys find some enlightenment through this video, and it's certainly an avenue I would like to take a lot more of, is talking through the different trading strategies that we have and different mindsets that we have. For me, the psychology part is just so important. As a matter of fact, I think it's more important than finding the next great stock, because you can find that next great stock, but then what the heck do you do with it once you find it, right? And also at these times when we have pain, that we thought we found a great stock and we were just wrong, or we thought that we found the right timing and we were just wrong, what do we do with that? So these are things that we want to have answers for, and it's certainly something that I would love to see a large part of the community, the YouTube community, come out and supply some reinforcement to let me know that it's also something that you would desire as well. It isn't always the most interesting to people because it's not money directly. it is some of that back end support, if you would, that helps you to be more conscientious and more stable minded investors. So those are the things that I think are important, and there's just so much more. We could talk for days, and it's weird to me to talk to the camera because I would so much rather just have an open conversation and really kick ideas around and really just gain new perspectives. I have taught mathematics for the past 13 years, and even the most basic mathematical principles, I still sometimes I have moments of enlightenment that come from teenagers that I wouldn't have even thought of before. So I don't care what level you are when it comes to investing, how long you've been spent doing it. Going out and talking to people and thinking things over and expressing it out loud. These are all things that can really help you just work past something or work through the logic of it. So I highly encourage you, just keep on educating, keep on working at it, and really let's work towards how to use investment for financial freedom that I know that we're all capable of. If you're interested in joining my Patreon at all, the link is down in the description. There's also a link for Webull if you want to sign up and get your 2 free stocks. I get 2 free shares as a result. I thank all of you ahead of time for any of the support that you've shown. Remember, these videos are for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.